I guess the overall theme was the economy is still pretty tough. To get top line growth, it's still pretty hard. One of the levers being pulled at the moment is around cost, and that has continued over the last 12 months to last 2 years really. So I guess the major theme is earnings growth is hard, and to get mid-single digits is probably a good result in this economy. It's a really hard time to find companies with that meet our criteria. So we're looking at the unloved stocks or unloved sectors at the moment. Anything on a P of 12 or less, we're finding if they can hit the result, or even if they slightly miss, they'll get a re-rate. I mean, a couple of in the large cap sector, I guess the one to look at is Computershare and potentially Ansell as well, where they came out and they actually met expectations. The stocks were priced on a P of 12, 13 times. They actually rallied very strongly on the day. I think Ansell was up double digits. Computershare was up over 8%. So these unloved companies that actually met expectations on low PE started to rally. So we're seeing value emerge at this part of the market, whereas the high PE stocks that miss, there's no room for error. So we were really focusing on those unloved companies with high short interest. That's where we found good money to be made. Yeah, one company that we in WAM Leaders, which we own, and our biggest position is Orora. That company was spun out of Amcor. They came out and they actually beat market expectations. The stock rallied strongly. They beat expectations with a few headwinds as well. So what we really liked here was, despite those headwinds, they managed to get productivity up and take costs out of the business. And going forward, we like this company because we think they can do a lot of acquisitions in the US, which will drive earnings. So it's a very defensible earnings stream and high quality management. So this company we really like, and probably was a standout for us over a reporting period. Throughout the month, we were quite high. We're probably about 80% invested, and we've gradually wound that back. So I think the market is going to be in for a fairly tough period over the next few months. And the reason why I say that is around, obviously the US is putting up interest rates. So before Jackson Hole, the market expectations was around 8% for a US rate hike in September. It's now sitting at 27%. So if the US do put up rates, I think that was going to put Australia in a very tough position. And we saw back in January, February, when there was talk of rate hikes in the US, our market fell dramatically. And I think this may play out again now. And we're starting to see some signs of this with the Chinese yuan starting to depreciate, and capital outflows of China again. So I think if the non-farm payroll number this Friday is strong, and the chances of a rate hike in September go up, I think our market could fall quite dramatically over the next few months.